Fox Business Alert: from sky to stomach in just minutes. DoorDash is planning to test drone deliveries in San Francisco. The food delivery app has leased a warehouse in the Bay Area's Mission District, about 2 miles from its headquarters, and will serve as a research and development space to test its autonomous delivery technology. The robotics delivery sector is rapidly growing, from drones flying high to just the tiniest little robots moseying along on your sidewalk. In the rush to grow robotics divisions, M&A is spiking. Autonomous food delivery firm Serve Robotics, whose sidewalk robotics you see on the left with the Uber Eats sign on it, has acquired Vayu Robotics, that's the blue one seen on the right, which develops AI-powered foundation models for robotic perception and motion. The deal, reportedly valued at roughly $240 million. In a Fox Business exclusive, Khosla Ventures' Vinod Khosla, who has backed Vayu since its early days and was also an investor in DoorDash, is here, along with Serve Robotics CEO and co-founder Ali Kashani. Ali, I'll start with you. Investors really seem to like this acquisition. Over the past month, your stock is up more than 20%. Tell me exactly what they can expect to see from the combo of Vayu and Serve.
Thanks for having me. Yeah, look, Vayu has been doing some incredible work with these large transformer-based models for autonomy, and we are deploying thousands of robots this year. We are, a few hundred today, 2,000 by the end of the year. So it was really a match made in heaven. We'd been talking for a while, decided to finally pull the trigger and kind of bring the teams together because we want to speed up. We want to be able to deploy robots even faster and more efficiently.
Vinod, how excited were you when you heard Serve wanted to scoop up Vayu? I mean, there are multiple ways, I guess, that you can have an exit when you're a venture capitalist. It could be the IPO, it could be purchased by private equity, or purchased by a public company.
I don't think of this as an exit. We're in it to see robots deployed, not a few thousand, but a few million robots, which will happen in the next few years. I think that's the scale of the opportunity. And when delivery costs drop from $10 a delivery to $1, it's not just about food delivery or grocery delivery. And we were original investors in both DoorDash and Instacart, but all of retail will need delivery, and it'll become economic if it's $1 a delivery. And that's why you'll see millions and millions of robots deployed. This is a great combination because Serve has the deployment capability, thousands of robots collecting data in the field, and Vayu has the best technology to build AI models, so they don't need to be teleoperated. They're completely autonomous. So I think whoever wins this race will win delivery globally, and delivery will grow substantially higher than it is today. Every retailer, every restaurant, every grocery store will have delivery.
Robotic delivery. Ali, you've been doing this for several years now with Serve Robotics, and I've seen them all over Santa Monica. I mean, you've got them in a lot of cities now, Miami, Dallas, Atlanta. So how do you prevent, and as you bring in this new company, Vayu, does it help prevent people from messing around with them? I mean, I've seen them, and most people are now ignoring them, like, oh, there's another little robot making a delivery. But, I mean, you got to have some cost of doing business when there's some nefarious people out there on the streets.
Yeah, I think folks have this expectation that people are going to react negatively. Most people actually get used to them pretty fast. The cure to all this is getting past that initial kind of familiarity stage, but do it thoughtfully. I think AI and autonomy helps with the robots being good citizens and behaving in such a way that very quickly they become just a normal part of life. And if you go to Los Angeles or now Miami and Atlanta, that's already happened. A lot of folks are just kind of used to them as a daily part of life. And there's really not a lot of incidents. The robots are more reliable than human couriers are today.
Vinod, this is obviously the future. And I was just reading in Wired magazine that they say OpenAI is building up heavily their robotics division. They're hiring a bunch of roboticists and all the experts. You were the first venture capitalist in OpenAI back when I don't even know what its valuation was, tiny, and now it's seeking a valuation of $500 million. I would love to know what you think OpenAI's lead is going to be in this, and how committed they are to, when they've got their hands and elbows into a bunch of different things, how committed they are to really jumping into robotics.
So robotics is going to be the next big jump after LLMs or what's called ChatGPT in normal terms. If you look at Waymo, and by the way, there were huge reactions to Waymo for a few months, and then everything's gone away. And Waymo in San Francisco is everyday sight. Nobody even notices it. And in a short period of time, Waymo has gone from being much, much smaller than Lyft to larger than Lyft in market share. That's the power of robotics and dramatically better experiences, and that will happen in delivery. So also, robotics generally is going to be larger than all of automotive in the next 15 years.
Well,
that's why it's such a big play. You see Elon Musk at Tesla switching that way. Obviously, every major AI provider will have a robotic effort. And then there'll be practical applications like Serve is doing with Vayu.
OpenAI is a fascinating company to watch. They're striking multi-billion-dollar deals, constantly building up data centers, et cetera. I would really love to know from you what you're hearing about OpenAI and its status and its effort to become a for-profit company, because right now, not-for-profit, they're trying hard to get it to that new stage.
I can't comment on the deals being negotiated. Much has been written and speculated. What I can tell you is so far, OpenAI and AI in general has been about technology and technology breakthroughs. We are getting to the phase where all of these companies, especially OpenAI, is leading in growth of revenue. Rapid revenue generation and deployment of these technologies is the next big phase. So it isn't about technology as much, and I do believe OpenAI will continue to lead, but it is a lot about getting revenue, which means practical applications deployed, and that is accelerating at a pretty rapid pace now. And I expect most of these companies will exceed the plan. I know OpenAI likely will exceed the plan it has put out to investors in terms of revenue growth. That's where the rubber meets the road. That's the exciting part for the next phase.
Yeah, you are the guy who invests for the very long term. You've got a lot of patience. When was your first investment in OpenAI? How many years ago?
2018 is when we committed to invest, late 2018.
Okay, so you're talking 8 years, and you don't think short term. You don't have the short-termism disease that a lot of the rest of investors, and they want instant gratification. So as you look at how long it takes for these companies to grow, and there will be stumbles along the way, what do you think of Sam Altman recently musing about the fact that AI may be at least in a bubble at the moment? And how would you react if you start to see suddenly at least one company go down or miss earnings, and the market freaks out, suddenly everybody pulls their capital, you don't see as many $300 billion deals or $3.6 billion deals, et cetera? What would you think?
Well, there's two ways to invest. Yeah, Wall Street bounces between fear and greed, and next quarter in building large businesses is largely irrelevant. You were just talking about Warren Buffett. He doesn't invest for next quarter. He invests for the next decade, as you've seen from his bets. I think that is the way to approach AI. I believe most investments in AI will lose money, but much more money will be made than lost, because if you make the right ones, they will be humongous, permanent entities. Many trillion-dollar valuations will be created. Google just crossed $3 trillion, I understand, today. It used to be a weird thing to talk about trillion-dollar market caps, and it's all the tech companies. My bet is more new trillion-dollar caps will be created in the next 10 years. and that's the kind of company that Serve is going to try and be, then has been created. So I do think short-term investing, which I don't know much about, I don't trade, some people will do well at timing the market, but the right way to play the market is say, here's my beliefs about 2030 and 2035 and the large economic changes driven by technology like AI, and bet on that.
So I've got a million questions here. You just said that most investments in AI will be lost, but many more businesses will sprout up and there will be a lot of capital that is created from it. Are you saying that people who invest right now in AI stocks might lose their investment?
You know, I don't comment on the stock market because I don't trade in the stock market ever. Haven't for a very long time. So what I'm saying is if $1 trillion is, or even 10 trillion is invested across 100,000 companies, most of those, 99,000 or more will lose money, but the ones that do succeed will more than make up for the 10 trillion that's invested, and that'll be worth 50 trillion or more. So you have to be in the right companies and be super selective. I just had an op-ed on this idea that most companies will lose money. The few that make money will make 100 times your investment, and you'll do fine if you're in the right companies. And that's a skill. And indiscriminate investing will lose money. Bargain hunting will lose money. Being hyper selective based on where you think technology is going is what will succeed in this market and generate great returns.
And as you said, you're not in it for the short term. Buffett doesn't go quarter by quarter. Ali, let me end with you. President Trump musing today on social media, saying that he feels that that CEOs should not be forced to provide quarterly earnings reports anymore. It should be 6 months. And Warren Buffett's often spoken about that with Jamie Dimon. It's not a new idea, but it would save money, the president says, allow managers to focus on properly running their companies. Do you agree with that as a publicly traded CEO?
You know, I agree with the sentiment for sure. I think we want to focus on building the business. So any ideas to help with that would be great. In fact, one reason we went public is because we wanted to have access to capital so we don't have to be constantly fundraising. When you're a private company, that actually takes a lot of our attention away. So this is already a really great improvement for us. But again, trying to remove additional reasons for us to be distracted is always great. We'll kind of have to watch and see what they actually do.
Well, Ali,
so Liz, Liz, I may add a comment here, if I might. The world is changing so rapidly. I just heard of a company with $100 million in revenue that has only one employee in the finance department, just a controller running on an ERP system called dual entry, because the AI-based ERP system does all the work. One employee for a $100 million company. Why would anyone ever buy NetSuite from Oracle? It's just a bad idea.
Oh, them's fighting words.
That's how radical the change is. and frankly, in this world, companies should be able to close their books every single day. So instead of saying, why should it be once a quarter? It could be every single day.
Wow. You are a big forward thinker, Vinod. Great to have you. Ali, congratulations on the acquisition. Great to have you both. Please come back. Thank you so much.